So, taxes. Fun subject, right? I just wanted to talk about this real quick today because I hear frustration throughout the year from real estate agents about the amount of money that they are paying to both the IRS and to state tax authorities. And don't get me wrong, in hard numbers, giving any money to the government is a painful thing to do. But when you're a real estate agent, when you work for yourself, you're responsible for paying all of the tax to the IRS. There's no employer that's withholding that money for you and paying it on your behalf like a W-2 employee. So while a W-2 employee gets to the end of the year and they file their taxes and enough money has been withheld to cover their tax bill, so it's a wash, they're in good shape. Whereas real estate agents get to the end of the year and they haven't paid anything in and they've made a ton of money because you're good at what you do and you have a massive tax bill. And it every single time generates sort of frustration in what that tax bill is. But here's the thing. Taxes, income taxes specifically, have a framework that as you add income to, you pay a certain amount of tax. So the more income that goes in, the more tax that's owed. But it's the same for everybody. So we're all working under the same framework for taxes. And with your real estate business, your taxes are this simple. Income minus expenses equals profit. You're going to pay tax on this profit. It's that simple. So you know how much you have to owe, and because you're the one doing it, because you're withholding, it's where we highly recommend you pay it monthly rather than waiting until the end of the year. But it's much more real. And just because it's much more real, because you're writing the check, doesn't mean it's unfair. And I see a lot of agents ignore their taxes, which is a terrible thing to do, but also sort of check out with them and let it sort of hang over their head as something that needs to be done basically year-round because you file an extension and then you get up close to the extension deadline. We're still trying to get information. We finally get it in, and then 3 months later, taxes are due again. So my position, and what really I think everybody should do, is accept the fact that we all work under the same tax rules. There's no magic tricks. There's a couple things you can do with sort of your retirement, but for the most part, in real estate specifically, there are no tricks. So accept that you're going to have a big tax bill, plan for it by paying through the year, and when you look at your tax bill, look at your effective income. Your total tax bill divided by the total amount of money you made, which then averages all of the tax brackets, and see what you're actually paying. Because I would be shocked if there's anybody out there that's really paying, 30, 35%, even though a lot of you are making a ton of money and are in that tax bracket. But at the end of the day, like I said, the whole point of this is to say we're all playing under the same tax rules, so let's be privy to the game, and at the end of the day, pay it as we go so we can keep our eyes forward, growing our business, which is what ultimately you all do best. My name's Ruben Mann. If you have any specific questions, you can reach me here at Tax In House. Have a great day.